Welcome back to Talk Tickers. Ready for another deep dive?
Always.
Today, we're digging into McDonald's Q4 2024 earnings call.
Ooh, interesting. A roller coaster year for them, right? E. coli outbreaks, menu shakeups, the works.
Seriously?
Yeah.
Globally, comparable sales were pretty flat, up just 0.4% in Q4.
But the U.S. market,
yeah,
that's a different story. Sales down 1.4%.
Oof. And that E. coli situation, did that really hit them that hard?
Oh, absolutely. Especially in the Rocky Mountain region. They reckon about $52 million in lost sales.
Wow, $52 million.
Yep.
Yikes.
But here's the thing. They bounced back pretty quickly.
Really?
Yeah. By December, guest counts were actually up, even better than some competitors.
So this is kind of like one back trust? Or...
Exactly. Transparency, working with the health authorities, and a serious revamp of their supplier checks.
Smart move. So crisis averted then?
Well, mostly. Still some lingering effects, but they expect full recovery by Q2.
Fingers crossed. So what's their game plan now?
Value. Big time. We're talking $5 meal deals, buy one, add one for $1. Trying to own that affordability space again.
Makes sense in this economy.
Yep.
But is it actually working? Making them any money?
Early signs look good. Take rates are meeting expectations, and customers are noticing. They feel like they're getting better value from McDonald's, especially after a recent visit. And get this.
Yeah.
The average check for a $5 meal deal, over $10. People are adding on extras.
The upsell magic.
Uh-huh.
Okay, so what about the global picture?
Mixed bag, honestly. France and Canada, things are looking up.
Uh-huh.
Germany and Italy, solid as always.
Good.
But the UK and Australia, bit of a headache, tough competition, economic pressures. The family market is feeling the squeeze.
Rough.
Yeah.
So any bright spots on the horizon?
Oh, definitely.
Rough.
Chicken. Big time. They're going all in, aiming for another point of market share by 2026. McCrispy going global, snack wraps are back in the U.S., and they've got a brand new chicken strip.
Ooh, snack wraps are back. I loved those.
Oh, yeah. And, of course, the Chicken Big Mac makes another limited time appearance.
The chicken takeover. I like it.
Yeah.
But they're also, doubling down on tech too, right?
Absolutely. Huge investments in digital, especially the loyalty program. They want to hit 250 million active users and $45 billion in digital sales by 2027.
Ambitious.
Yeah. And then they're rolling out that ready on arrival feature.
Oh, yeah, that's cool. Ultimate convenience.
Exactly.
So chicken and tech. But what about behind the scenes at McDonald's? Any big changes there?
Oh, massive.
Really?
They've got this huge project going on, Global Business Services.
Global Business Services.
Or GBS. They're streamlining operations, centralizing stuff like finance, HR, data analytics. It's a big one.
Okay, so like what? Cost cutting?
Long-term, yeah. Efficiency, making the organization more agile. They don't expect big savings until 2026.
So why do it now?
They're already seeing some wins. They managed to cut hiring time for restaurant managers in Australia by 50%.
Wow, that's a huge improvement.
Right. That's just a taste of what's to come.
Streamlined, efficient. They're building the corporation of the future.
Exactly.
Well,
laying the groundwork for growth and profit down the road, playing the long game.
Smart. Okay, so we've covered chicken, tech, a whole lot of behind-the-scenes action. But before we dive into the financial nuts and bolts, let's take a quick break.
Welcome back to Talk Tickers.
All right, so we covered E. coli, value menus, chicken, the global business services thing. But let's get into the financials.
Sounds good.
What were their adjusted earnings per share?
For the quarter, they came in at $2.83.
Okay, and how does that compare to last year?
That's a 4% decrease.
A decrease. What's driving that?
Well, mainly it reflects the pressure on their top line. You know, those flat global comparable sales we mentioned.
Right.
That lack of growth impacts everything. Plus, their operating expenses also increased this quarter, which puts further pressure on their bottom line.
So sluggish sales growth and rising expenses, not a great combination.
Exactly.
What are their margins? How are those looking?
Their adjusted operating margin for the full year was just above 46%.
Above 46%. That sounds pretty decent given everything they've been dealing with. Is that a good sign, or are there some hidden issues there?
It definitely shows how resilient their business model is. Even with the challenges, they're maintaining a healthy margin.
Okay.
That's partly due to their cost optimization efforts and partly because they have pricing power in the market.
Right.
But keeping that margin up with costs going up and the possibility of a recession,
Right.
that's going to be a big challenge going forward.
That makes sense. So are they at least using their money wisely? Where's their capital going?
They invested just under $2.8 billion last year in capital expenditures, More than half of that went to opening new restaurants, both in the U.S. and internationally.
Okay.
They're also putting more into their development pipeline, so they're setting themselves up for more expansion.
So it's a long game, as we said before, expand and strengthen at the same time. But what about shareholders? They need to be kept happy, right? What's happening with dividends and buybacks?
Yeah.
They returned $7.7 billion to shareholders last year through dividends and share buybacks, and they're still planning to return all excess free cash flow to shareholders over time.
Okay.
Which would be good for investors who want a steady income and companies that prioritize shareholder value.
It definitely seems like they're keeping shareholders in mind. What about the CEO, Chris Kempczinsky? What were some of his key points from the call? What's his vision for the future?
He really stressed the need to be agile and move quickly.
Makes sense.
He wants to get guest count-led growth going again and take market share from their competitors. He sees the accelerating the arches strategy as how they'll hit their 2025 goals and thinks McDonald's can come out of all this uncertainty even stronger.
So he's not shying away from the challenges. Did he give any specific examples of how they'll achieve all this?
Definitely. He highlighted a few key things. First of all, he repeated their commitment to reclaiming that leadership and value with things like the McValue menu. And they're very focused on adjusting their value programs in different countries, catering to what people want there and adapting to the economic conditions in each place.
So a two-pronged approach, focusing on value in the U.S. and tailoring it for the rest of the world, sounds smart.
Right. And he's really excited about how their chicken offerings could grow.
Yeah,
Remember, they want to increase their chicken market share by another percentage point by the end of 2026. And he specifically mentioned things like expanding the McCrispy globally snack wraps coming back to the U.S. and how well the Chicken Big Mac is doing as proof they're serious about chicken.
Sounds like they're putting their money where their mouth is there. But it's not just about the food. Their tech investments seem really important to their strategy, too.
You're absolutely right. He reaffirmed how committed they are to digital innovation. Their loyalty program is a big part of that.
Yeah.
They're on track to reach 250 million active loyalty users and a huge $45 billion in annual digital sales by 2027.
Those are some pretty ambitious numbers. It seems like digital is going to be a huge driver of growth for them. Any other details about their tech plans we should know?
Yeah. He also talked about the ongoing rollout of their Ready on Arrival feature.
Right, the Ready on Arrival.
It uses real-time data and customer insights to make sure orders are ready exactly when customers arrive.
So it's all about convenience.
Exactly, which improves the whole customer experience.
Makes sense. Okay, we've gone over the financials, their strategy, and even heard some of the CEO's vision now. Let's look at their plans for 2025. What's next for McDonald's?
Good question.
What kind of year are they expecting?
They're projecting their operating margin to be in the mid to high 40% range, which would be an improvement over 2024.
Okay.
And they're going to keep investing in technology, digital stuff, and that global business services program.
Read the GBS.
They believe all that will make them more efficient in the long run and set them up for sustained growth.
So they're investing, but with a focus on improving their margins?
Exactly.
Sounds like a solid plan.
Yeah.
What about globally? Any big expansion plans?
We're planning to open around 2,200 new restaurants worldwide in 2025.
Wow, 2,200, that's a lot, especially with the economy being a bit shaky.
About a quarter of those will be in the U.S. and their international operated markets. The rest will mostly be in their international developmental licensed segment.
So they're not letting a potential global slowdown stop them.
It's a bold move, shows how much they believe in their brand and the potential of the global fast food market.
But are they being careful?
Oh, yeah. They're expanding strategically, paying close attention to what's happening economically and with consumer trends in each region.
So they're being cautious, but still moving forward.
Exactly. Did they say anything about their economic outlook for 2025? What kind of world are they getting ready for? They think the economy and consumer behavior will gradually stabilize in 2025. But they know that different markets are facing different challenges right now, and they're ready to adjust as needed.
Okay.
They emphasized how committed they are to offering great value and getting guest count-led growth going, even if things are tough.
So it's a cautious optimism.
Yeah, they're not ignoring the possibility of economic trouble, but they're not letting uncertainty hold them back either.
It's a proceed with caution, but keep moving forward kind of attitude.
Exactly. They're confident they can adapt and succeed no matter what happens. They've been through tough times before, and they think they have the right strategy and the right people in charge to handle whatever 2025 throws at them.
Well, that's our deep dive into the financial and strategic side of McDonald's Q4 2024 earnings call. Now, before we move on to our This Is Not Financial Advice segment, where we'll throw around some outrageous but maybe possible trade ideas. Let's think about what we've learned so far. Even with all the global uncertainty and those hiccups like the E. coli thing, McDonald's is still a powerhouse in the fast food world.
It is amazing how they're using technology and smart investments to keep growing.
And that chicken focus.
Don't forget the chicken.
Yeah, those snack wraps sound pretty good right now.
Oh, yeah.
But beyond the menu, what really stood out to you about their approach?
That global business services thing they're doing.
The GBS.
Yeah, it's a long-term play, but it could really change how they operate, make them way more efficient and flexible.
It's like they're building a whole new engine for the McMachine.
Exactly. They're becoming more data-driven and responsive, able to adapt quickly to the market and what customers want. It's thinking ahead, which could give them a real advantage in the future.
Okay, well, we've gone through the earnings call, analyzed their strategy, and even come up with some pretty wild menu ideas. So now it's time for the main event, our This Is Not Financial Advice segment, where we put on our imaginary Wall Street hats and come up with an outrageous, but maybe, just maybe possible trade idea. Are you ready?
I'm always ready for a good hypothetical trade.
All right, get this. McDonald's has a history of successful celebrity meal collaborations.
Oh, yeah.
Travis Scott, BTS Saidi, all big hits, tapping into pop culture, creating tons of buzz.
They definitely know how to get people talking and create a marketing frenzy. So what's your idea?
My crazy but maybe plausible trade idea is McDonald's teams up with Elon Musk for a limited edition SpaceX meal.
Elon Musk. Now that's thinking outside the Happy Meal. I like it.
Imagine a Mars-themed burger, a rocket-shaped chicken sandwich, even a McFlurry with freeze-dried astronaut ice cream.
A SpaceX meal. That's a great marketing concept. It would be all over the news and appeal to both tech people and space fans. So many possibilities.
Exactly. Viral marketing gold. The stock would skyrocket just because of how unique it is. McDonald's launches SpaceX meal, stock goes to the moon.
I have to admit, it's a very interesting idea. McDonald's is all about innovation and doing new things. This would fit perfectly with their brand and get people really excited.
All right, everyone, that wraps up another episode of Talk Techers. Remember, we are not financial advisors, so don't make any investment decisions based on our fun trade ideas. But we hope you enjoyed our deep dive into McDonald's Q4 2024 earnings call. Until next time, keep those tickers ticking and stay hungry for knowledge.